Hey everybody, it is April 4th. This is just a little update. Nothing major, just on the same topic like we were talking about last time. Basically, cycle videos got good feedback. I definitely appreciate everybody letting me know what they thought of it, and kind of breaking it up into small parts. But I kind of wanted to go through a couple things besides that, just kind of understand what I was getting at, what we're seeing now. And I got some questions that I was just going to go over and answer real fast. So before we start, I'll get into some of these questions. Question one, what do you do between regimes? And this is probably my favorite question because I think so many people, especially people who use regime models, Hedgeye being one of them. I know Darius Dale does. I don't know his exact idea between regimes. And then, there's a bunch of funds who use them, a bunch of newsletters, and so on. When I'm between regimes, I think the best thing to do, and this is something that took me many years to learn, is to not overreact to it because you can absolutely go right back into whatever regime you were just in or shift completely and you don't know. So basically, if I start to forecast that I'm coming into another regime or I start to see relative strength going into certain areas, or my fundamental models are saying, hey, like Q2 will look like this, I'm gonna still come in and go, okay, Q2 could look like this, but I already have these positions. So for example, somebody asked me something about the energy sector. Yeah, I'm still long the energy sector. Until that signal changes, that doesn't mean I'm going to just unravel and get out of it. That doesn't mean I'm making a prediction that energy is going to go great. It's that there is no, I didn't get it stopped out of my signal yet, in the long-term model. It's not something that I'm seeing really breaking down in any major way. It's been holding in the same level for forever now, basically, which is odd, but it does happen. So, for me, I'm gonna go, okay, I want to keep this. I'm still gonna think the possibility is that it could possibly unravel, but I also know that my long-term view is that energy and these commodities and commodity-based sectors are going to be the outperformers for, probably a little while here, maybe in the long-term view, talking about 5 years. So if I'm looking at that from that view, like, yeah, like you don't want to sit there and get in on a position. Let's say I have no opinion on energy at all. I hate it. I'm still going to do the same thing, because guess what? I don't know the fucking future. And that's something that's really important to understand trading. Like you can have your highest conviction about whatever position, it doesn't matter. I could be extremely bullish on energy and extremely bearish on technology or semiconductors, but at the same time, if my macro models are telling me that, hey, technology looks pretty good here, or my macro models are saying like, hey, yields are coming down, and if I think they're coming down, most of the time tech can benefit from that. Whatever it is, I can kind of come in and go, okay, well, I don't know everything. And because I don't fucking know everything, there's a very big possibility that I could be wrong. And being humble and open to that is freeing, one. And two, it's letting you know, like because you don't know everything, that doesn't mean you can't make money. So many people I think talk to me like I'm a fucking idiot most of the time. It's really annoying for me. Honestly, it's something that kind of is like, why you are even talking to me like that? Like, hey, like, hey, I know that looks good on a breakout, but therefore this thing, is stupid anyways because of these fundamental reasons that you obviously don't understand because you can't read you can't read or something, maybe. I don't know. But just because I focus on the price action and I let that kind of dictate how I'm going to look at things certainly doesn't mean I don't understand everything that's going on in it. What people, are constantly coming to me to tell me to be careful with certain things. Oh, be careful with that. Oh, lumber was going up a lot. Be careful with that. Be careful with sugar right now. Sugar is going up a lot. Be careful with this and that and the other thing. And it's like, for me, I need to be, I don't know about you. You make money however you like to, but I know I need to be careful betting against trends for my style, my trading, and what I do. If I'm betting against trends or pulling off positions because I think blank will happen, because I have plenty of opinions. in my head, like I have plenty of opinions just like anybody else, like because you're a price-based trader and like you you use macro models and you're systematic does not mean you're a fucking idiot, like it just means that you look at things and you go, well, because I've been in this situation before where, let's say technology is looking good. And I've been in a situation before that technology has looked good and I've thought it looked bad for whatever reason, valuation, whatever the hell. I changed my models, my thinking, my everything to be based around what I have found to work. Because that's all I'm looking for. I could give a shit less if it sounds smart, if it impresses people, if I can write a letter and more people would subscribe because of blank. My biggest goal is to do well in the markets. Like I obsess over it. I'm miserable and I'm not. I am completely obsessed with doing well in the markets, and that doesn't mean that I have to read about it or learn about it the way you do or something differently. I have just figured out what works for me. And I don't act really smart and I don't tell people what works for them all the time. So I think sometimes people think that I don't understand anything besides, what a price action is. And not to mention, if you don't, I had another question that came up, which is, blank, if you're going to buy this, what technical reason are you buying this? Like it has to be this, because sometimes they'll talk about 100-day highs, or sometimes they'll talk about breakouts, or sometimes they'll talk about this. I do have this up because I was using this today, so I guess we could jump in. I don't usually show everybody this, but this may or may not be what I actually do. So, but let's just kind of go through this for a second. So quickly understanding that these are all the different strategies I use. And yes, some things can be very subjective and fit into some of these, like special opportunities events. Obviously, that could be very subjective. And you can see that's way lower on my shot profile, basically, than other trades. But once again, I do those trades sometimes. There are many different styles of trading, but if you're looking at it, just the systematic things, these are looking at bottoms, M top, W top. That's a Bollinger Band type trade. And then if we're looking at trend following, that could be your breakout models, 100-day highs, whatever you want. I have systematic models for that. I have systematic models for volatility. I have systematic models for cross asset spread trades. I have systematic models for just about everything. So there's, just because I say something like, hey, yes, breakouts are important. Yes, this made a new high. Yes, 100-day high. Yes, 50-day high, whatever. That doesn't mean that's the only strategy I use. There's many different strategies. And there's many different assets where these strategies work. But my main thought in telling everybody this is, putting someone in a box when you really don't understand every single bit of their trading isn't a good thing to do either. And once again, if it's, I try to, if it's somebody who's very good at trading, there's plenty of people who are very good at trading, and I see their things and I'm like, I have no idea what they're talking about. That doesn't make any sense to me. I will shut the fuck up because I understand that I want to understand them. I know that they're very good at what they do. I need to respect, and either way, like, it's just a normal human being thing. Be respectful, even if you disagree. That's very important to be a good human being in general. So that's another one. And then relative strength. Relative strength is another question I got. Why did I go through relative strength? And the reason why is I don't know how exactly to frame everything in a way that I could show where a cycle could be heading besides using relative strength. Because for me, I want to always pay attention to that strength. I want everybody, if you are going to use relative strength, I implore you to build a model that could do that. I hear so many people talk, people who hate technicals or hate fundamentals talk about things like relative strength or breadth or things. And like, if you're going to do that only when it's helping your case or whatever you're doing and you don't really understand it, just don't talk about it. Like, you're never going to hear me talk about PE ratios and some shit that I don't use. And the reason is that if you do use that, well, during that period of time, like, let's say you're wrong, like, let's say, something comes up and you're like, oh my God, like that was completely wrong. And I, looked at this one technical and it told me to do this and I didn't. You're going to swear it off forever anyways. So you might as well just put it away or really learn about it, really get into it. But if you don't like it, don't do it. If that's not your style, don't touch it. Do something different. And it's not making fun of anybody. It's saying that everybody has their own style in trading. When you try to mix it up and fit everything to fit your try to grab different things only when it suits you, that's not going to help. It's all about figuring out a strategy to do over and over again, some methodology, some strategy that you can use over and over again. I had a trader when I first started trading many years ago, and I was like, look at this trade, I did really good. And he was like, well, how did you do that? I don't know. He said, well, then it doesn't matter. I said, wow, that sucks. I feel like I worked really hard to do that. No, if you don't know how you did it, you can't do it again and again. So it doesn't fucking matter. And so all of these things are really important in just understanding, like building your own methodology, learning how to use that methodology in a way that works for you. Because that's really what matters. And really identifying what's your edge, what's your strengths. When I was in school playing basketball, it's a and I talk about bike riding, but I think basketball, more people can watch it, more people understand it. So that would make more sense to most people. But I was always a driver. I was very athletic. I was very fast. I could play defense really, really well. I could do a lot of things well. I had a good free throw, good even free throw line jumper, but I wasn't a good 3-point shooter in school. So, it would be like if I'm using some strategy that's not my own, it'd be like me going away from all my strengths and being like, hey, coach, I'm going to go out and shoot, threes for the rest of this game. Sorry. That's just what I want to do now. It would take away from everything I did well. So working on it, finding your edge, it isn't only like, I think people talk about finding your edge and they talk about their edge. Like it's really just simply identifying your strengths. What's your strength in trading? What are you actually good at? What is something you've recognized again and again that has made you money? And then continue to look for that, identify that, work on that, and do that again and again. And that's really important. So going through these charts, why I brought up a couple charts in this one to add to the questions, we did have some developments. The NASDAQ was kind of a speculation. The trade did have signals. We did get long it, but it was mainly a lot of speculation so far before anything else kind of came. But now we have buy signals across the board. And a lot of it is, yields coming down, macro models talking about, tech actually does very well in like level inflationary environments, not really getting out of control, but kind of just stuck in a range and with inflation. And then with growth slowing, like that's a good environment for tech. So you put that together with some price signals and so on, it looked like tech could start to be an outperformer again, not to mention, once again, relative strength, always one of the most important inputs in any trading model for me. Put that all together, we starting to see buy signals. It's starting to look good. This is a very unusual signal during a bear market. It's not a signal that we see, it doesn't catch perfect tops or anything, but it does usually tell you where bottoms can be. And caught a bottom here, caught a bottom here, caught a bottom here, another one here, bottom here, bottom before the run into 08, couple bottom signals in 2000, 1 and 2, like right at the bottom, basically. Another one coming in here, another one just in the middle of a trend, another one, coming out of the 2015 industrial recession, there was a bottom signal, another one at the bottom in 2018 coming out of that, and another one recently. So this is an interesting signal, something that kind of is telling me, hey, like there could possibly be more upside here. This could be a sustainable rally. And it's, once again, it's not a like I know this for a fact, because it's a lot of evidence that I use all the time, that I make notes on, have written about, have back tested models using can tell me that, hey, this is possibly another bottoming signal. So that's another signal there. New York Stock Exchange, once again, is another signal from another model. Global breadth. So basically, this is all Pring. Martin Pring created this model. He's definitely a good guy to watch if you want to understand intermarket analysis. He's one of the best. Definitely learned a lot from him, and a lot of my models are similar things to what he uses at times. But we saw that this started to peak out just a little bit the other day. So you can barely see it on this chart because it's a little bit grainy in comparison. But on the actual chart, you're seeing that the global breadth is just above this zone today. And we're seeing the global index isn't there yet. So most of the time that happens, the global index will follow. So we need to keep an eye on that. Now, gold made its highest closing high ever in a month in March 2023. That's a good sign. A lot of people, like, if you use daily closing highs and you go daily closing highs are very important. You should then also think a little bit past that and go, well, daily closing highs are important. Weekly closing weekly closing prices are very important too. And also one step past that, monthly closes are important as well. It shows what people are willing to hold in the next month, what people are willing to get out of or into, so we're seeing that gold is holding up very well. I could see this as the start of another like higher in gold with new highs. We'll have to see where that ends up, but so far the trade has worked out pretty well. Bonds were another one that we talked about that said, hey, this could be a good time to start looking at bonds, start seeing where these are going to go. This has still been in a range. It hasn't gone much of anywhere, but really we're getting over the 40-week MA, which is close to the 200, basically the 200-day moving average. And above these levels, it looks really attractive. If we could start hitting this upper Bollinger Band, like it's going to be a really attractive trade. So at the moment now, I wouldn't, buy it right here, but a little bit higher, clearing some of this stuff with a stop, around here, that could be a great trade if you don't already have a position. So bonds could be a very cool trade at the moment. So I'm still think that bonds are another place to go. Sugar weekly. Now the commodities, some people, I didn't get to this question. That's another one I should get do I think the commodity trade is over? Absolutely not. I don't see anything stopping it at the moment. I think it'll be different than what we saw before. I think it'll be we'll see something like sugar rallying and going crazy for a little bit, and then it'll stop, and then the next thing will kind of go for a little bit and stop. It's not going to be like 2020 where you can just throw darts at the commodities and they'll make money. It's going to be a little bit different than that. And sugar has been moving nicely. It's been a very steady trade here, and could go a lot higher. Sugar is a mover when it gets moving at times, so we'll see where that ends up. Oil, another thing that's a big part of intermarket analysis that people just don't understand is that intermarket analysis, intermarket relationships change all the time. People said, oh, well, sugar and oil, they have to go together. No, they do not. So that's another one just to think about. Oil, I love these signals, false breakdown signals. So we got this false breakdown and reversal signal recently, and that was beautiful. That was as textbook as you can get. Right up, moving up higher. Oil now is long. We'll see where that ends up. It's not fully shifted trends. I really like these false breakdown signals, especially. You're going to also hit the 200-week MA. No, I do not think moving averages have magical powers, but I do know a lot of people, even people who say they do not use them, they watch those moving averages. So if they're watching those moving averages for points to buy, they came in at that point, we got a reversal. It's also important to note that when you're looking at these emerging markets and other areas around the world, they can't be profitable with oil much cheaper than this. They need oil to be above these levels to be profitable. So they're going to do what they can to push it up. Saudi Arabia started to cut productions. I think if I read that correctly, I did read it, but I'm remembering it. I don't know if I'm remembering that correctly, but I'm pretty sure they were the ones to cut production. And so OPEC cut production, and other people started talking about it as well. There's a bunch of countries in there that were all kind of fighting for it to cut production over the last few months. They come in, they cut production, oil shoots up even more. If we could start to see it get above that 82 level, that would be really profitable in oil. So we need to see it kind of get a little bit more on its feet, start running a little bit more, and then people can get a little bit more excited about it. At the moment, it's kind of, just this false breakdown signal. Did rally. Good place to buy, good trade so far, into profits already, but just give it some time. We need to see where it really ends up. And Bitcoin's hated rally. With Bitcoin having this incredibly hated rally, it's been fun to watch, honestly. For me, it's been fun to watch. When you have something as volatile as Bitcoin, something as loved and hated as Bitcoin, it's going to be a very volatile asset. There's not as much money in it as other things either, so that creates more volatility as well. And so seeing that we're kind of getting above all the moving averages on the weekly charts as well as the daily, we're holding up even the days that are bad. It's not going down by much. Says that there's a lot of demand for it. Says that people are interested in buying it. Says psychologically, and also we have to also think about what Bitcoin says about the general market and population. So Bitcoin, what it's saying to me at least is that there is risk out there. There is demand for stocks, things that make money, out there at the moment. So if we're looking at that and going, okay, well, there are buyers out there. There is some form of liquidity out there, because if Bitcoin does not move up, people want to say it's because of the new financial system. It's because of this. It's because of that. I have never, now there isn't a long enough back test to really say for sure, but I have never seen Bitcoin just go up because of some safe haven demand situation. Every single time, if it gets into anything that's a rough market environment for Bitcoin, it starts to fall on its face. So this is a great environment for Bitcoin. It is moving up. It does like it for whatever reason. Let's see if it holds up. That to me is always the test, is can it hold up? I can speculate, I can see what a trend is, I can do all these things, but the real proof is it going to hold up? Is it going to continue to trend higher? Can it start to make it through levels of resistance? Can we get up to that $35,000 level? If we do all those things, I'd say Bitcoin is going to be, another big mover and could get right back up to those old highs. If not, that's saying something else, and we have to look over everything else. But for now, everything's working just as we thought it would. Everything looks just as we thought it would. And, when the market is doing exactly what you think it should be doing and what you drew up in the beginning, it's a good thing. It's a good idea to just walk away and let it do what it's doing. Now, once again, risk management is always important. You need to have your stops in place. You need to have position sizing. You need to have diversification between different things, different assets. Diversification in stocks is not exactly what I think is the best idea, because stocks basically, they work together most of the time. They trend up together, they trend down together. But diversification meaning, do you have currencies? Do you have commodities? Do you have bonds? Do you have all these things? Are you trading all these different markets? For me, this is what works for me. So I can't say what works for everybody else. Maybe something works for everybody else so much better. But for me, this is what works. So I'm sharing my ideas, my experience, my strength, and hope everybody's having a good day. And we'll talk soon.